Hello team, welcome to another ATP Geopolitics video with myself, Jonathan M.S. Pierce. This is a US economics update video given the announcement concerning the US GDP contraction the other day. I did a breaking news walk through the fields concerning that, literally. And I'm sitting back today. Back is aching a bit from hunching over too much. And I'm going to talk to you about the US economy a few days on from those announcements. So what were the announcements? Well, let's give it over to CNN to
a crucial new report
explain.
Showing the US economy shrinking for the first time in 3 years. The GDP fell at a rate of 0.3% as President Trump's massive and ever-changing tariffs rattle consumers and businesses. Moments ago, on his 101st day in office, the president tried to pin this data on his predecessor.
Core GDP, and this is, you probably saw some numbers today. And I have to start off by saying that's Biden. That's not Trump, because we came in on January, this is quarterly numbers. And we came in and I was very against everything that Biden was doing in terms of the economy.
And I'm joined here by some amazing reporters, CNN's Elena Treen, Susan Glasser of The New Yorker, Nia Malika Henderson of CNN and Bloomberg, and CNN's very own Phil Mattingly.
The top line number is not one you should focus on. That is a reality here. What I think the most concrete takeaway from this GDP print is the economy going into April 2nd, the so-called Liberation Day, was solid. And we have seen that across the numbers, whether it's jobs, whether it's wages, whether it's investment. Going into that moment, it was solid. In preparation for that moment is where you saw kind of the core of how things were driven within this report, which is an absolute, almost once in a generation surge in imports. Mostly economists believe because companies were trying to front run
Trying to beat
those
the
tariffs.
tariffs.
They're trying to pull forward essentially all their purchases. That private investment is real. The concern is that that's not actually going to be maintained over time. It's not going to be consistent because they're trying to pull it forward. Consumer spending, solid, but it did start to drop a little bit, and we've seen that through a number of surveys. So if businesses are trying to front run, buying huge amounts of equipment, bringing things in, imports, and consumers are starting to slow down, and businesses aren't going to keep spending like that because of the uncertainty, because they don't know where the tariffs are going to be in the weeks and months ahead. The reality is, when economists look forward, including this report, they're saying this is a very, very uncertain moment. But the idea that this is all about Biden, or as Trump said in his Truth Social post, says nothing to do with tariffs, it is very much about Trump, and it has everything to do with tariffs.
And I also want...
Okay, so that's a little bit of an explainer. We're going to go into a little bit more depth concerning some of these ideas. But, I mean, the first thing to understand is that the blame is being put on Biden by Trump, and that Peter Navarro, who's Trump's economics guru, and I say that because really the trade war is all Peter Navarro's thinking. The tariff, Trump has always loved tariffs, right? In his head, with his lack of understanding of macroeconomics, Trump has been consistently a big fan of tariffs. So tariffs are fine if they're used strategically, right? So you're thinking, right, I want to protect this industry here because it has strategic benefit for our economy as a whole. And so in order to protect that industry, I'm going to put tariffs on that industry's products coming in from abroad. You know, we did this in the UK during the Industrial Revolution. We had infant industry protectionism, which actually helped to kickstart or helped to facilitate the Industrial Revolution, right? So tariffs can be very, very useful indeed. But putting across the board tariffs on every country in the world, on every good, is absolute insanity. It's just so, you know, you really need to understand, like, no one is being anti-tariffs, prima facie anti-tariffs, right? But most economists, most everyone is being anti-Peter Navarro's approach and Trump's approach of just tariffing the crap out of everything and everyone. So that needs to be said. And you've got this desire from Trump to blame Biden for everything when things are bad, and say it's Trump's responsibility when things are amazing, even when he wasn't in in office. And then you've had Peter Navarro wheeled out to give his defense. So this is Trump.
First quarter GDP numbers just out today. Core GDP. Now we're removing distortions from imports, inventories, and government spending was up plus 3%. But this is Biden's economy because we took over on January 20th.
Now, there's some absolute insanity there, right? And I'm going to explain. So he says, if you take out all the negative numbers, all the stuff we don't want to take into account, then actually everything's up 3%. But this is Biden's economy. Well, if it's Biden's economy, you can't like, then the stuff that's underneath is Biden's economy. Do you know what I mean? Like, if I take out all the negative numbers, then this is positive. But all the negative numbers were the things that you have done. So the front loading of buying of imports, which negatively affects GDP because that's imports. It's not your own gross domestic product. You're not producing that stuff. You're importing it. And if you're going to take all of that out, and then, hey, the numbers look good. But the reason everyone's front loading imports is because you've put the tariffs on. So what he's saying here is just entirely nonsensical. You can't blame Biden where Biden is responsible for the core stuff going on here. Like, you can't say this is Biden's economy. Like, we've only just kind of taken over. Okay, well, if you strip out all the stuff from what you've just done, which is all the negative stuff, and then, you know, what's left is the core stuff, that, and then you're saying this is Biden's economy. Well, that's the core stuff. So you're saying, actually what you're saying is the good stuff is Biden's and the bad stuff is mine. Now, he's talking about, you know, also getting rid of jobs from the government. But the problem is, in a Keynesian way, like, if you are employing lots of people in the US government, then, and you're putting out loads of contracts from the US government, then actually that stimulates the economy. People have jobs, they're spending money, contracts are coming out from the US government. This is kind of New Deal stuff. Let's go and build loads of roads, let's go do loads of stuff. That's how you stimulate the economy. So he's now saying, if we're going to take out all this stuff like government jobs and contracts, and then we're going to take out front loading, you know, you like, none of what Trump just said makes any sense whatsoever. You have to understand, honestly, you have to understand that he does not have a clue about economics. I'm no I mean, I've got an economics qualification, but that was many, many years ago. I'm no economic expert at all, but I can guarantee I've got a slightly better grasp than Donald Trump, and he is just talking nonsense. So then you get Peter Navarro, who's his tariff guru, saying this.
This was the best negative print, as they say in the trade, for GDP I have ever seen in my life. It really should be very positive news. This was the...
Wow. Okay, so this is the best negative print. This is best negative news I've ever heard. The old up is down and right is left. So some people saying that, you know, this is real Baghdad Bob stuff. You know, when they used to wheel out Baghdad Bob in the Gulf War to give his positive spin on absolute disasters, and he became a laughing case. Well, this is it. You know, this is absolute gaslighting. They will teach this in future classes about gaslighting, says Brian Krasenstein. Now, we are going to look at one of the claims he makes here, though, and let's see it in a little bit more detail here.
I got to say just one thing about today's news. That's the best negative print I have ever seen in my life. And the markets need to, like, look beneath the surface of that. We had a 22% increase in domestic investment. That is off the charts when you strip out inventories and the negative effects of the surge in imports.
Okay, a couple of things. So he said we've got incredible investments coming in, 22% increase. But of course, Donald Trump has just said it's Biden's economy. So if you're getting investments, that's Biden's investments. I'm sorry, that's Biden's investments. And actually, when you understand how long it takes for entities to invest, like, you don't just invest like that. You don't go, oh, do you know what? I found under the sofa $20 billion. Let's invest it in the US doing so. No, That's like 6 months, a year, 2 years in the making. So when you've got the Chips and Science Act, when you've got the Inflation Reduction Act, when you've got all of these kind of stimulus policies from the Biden administration, you know, at the end of his administration and going on to into the Trump administration, that's where you're going to see the investment still taking place. That's long-term decision-making coming to fruition. And Trump said that's Biden's economy. Well, yeah, I would argue that that investment won't have come from like 2 months of Trump faffing around causing chaos. So he's wrong on that. And then he talks about the front loading of the... So basically, these corporations, these companies and whatever, they are very cognizant of the tariffs coming in. And so if there are tariffs coming in, you want to buy as many of your widgets or whatever that you get from abroad right now, because they're just about to go up 145%. Right, so everyone in Q1 was buying stuff from abroad. That then deflates your GDP because it's all imports. But that's precisely because that is something that is at the feet of Trump, right? So that's a very immediate thing where he's coming and said, I'm going to tariff the crap out of everyone, and everyone goes out and buys stuff. That's not your long-term kind of decision-making thing that we're talking about with regard to investment. Right? That is, oh my God, let's buy as much of this stuff as possible because it's just about to go up seriously in price. So again, they're like, this is completely disingenuous excuse making from both Trump and Navarro.
The tariffs, you had 3% growth. So we really like where we're at now. With respect to China, like, look, Jim,
we had 3% growth, yeah, and Trump has just said that that's Biden's economy. Okay, let's have a look. This is from Market Watch here. Let's have a look at a little bit of an explanation concerning that front loading of imports. GDP shrinks for the first time in 3 years as Trump tariffs trigger record trade deficit. Tip of the iceberg. So the US economy contracted in the first quarter of 2025 for the first time in 3 years, reflecting a surge in imports ahead of Trump's tariffs and a slowdown in consumer spending. Okay, so there's a little bit more than that front loading. Gross domestic product, the official report card of the economy, shrank to at an 0.3% annual rate from January to March. The government said Wednesday it's the first contraction since early 2022. The biggest trade wars since the Great Depression have stunted the economy and raised the risks of recession. Economists warn that the growth could slow down even further and inflation could rise if the disputes aren't settled soon. So the other thing to throw into this is inflation, right? So not only have you got a slowdown in consumer spending, you also, which is possibly not inflationary necessarily. There's lots of reasons why that could be. But then you've also got inflation, which will then add to further consumer spending slowdown. So the biggest culprit, they say, behind the negative reading in the first quarter was a record surge in imports as the US businesses sought to bring in foreign goods before the tariffs, which typically raise the cost of imports before those tariffs took effect. Now, okay, so they can say, well, this is just, a result of the tariffs front loaded. Yeah, but that is on you, right? So that biggest negative effect on the GDP is a result of the tariffs. That is your economic policy. The record trade deficit shaved a whopping 4.8 percentage points off GDP, even without the effects of the trade wars, though. And here's some important reasoning. The economy would have showed slower growth. Consumer spending, the main engine of the economy, deflated in the first quarter after unsustainably strong increases in the last 6 months of 2024. So the claim here is that actually under Biden, there were really big consumer spending increases in quarters 3 and quarter 4 of 2024. But they say here that was unsustainable. So you were always going to get a drop in quarter 1, 2025. I don't know what the reasoning for that would be. It doesn't go into that. Consumer spending rose at a 1.8% clip, well below the 4% and 3.7% gains of the final 2 quarters of the Biden administration. So that is a real dip in consumer spending. Now, key details are that the households reduced spending in the first quarter largely as a result of the severe winter weather and post-holiday lull in spending. So usually you're going to see that January, February. Everyone splurges for Christmas and then you tighten your belt. Americans paid down credit cards and saved more money after splurging towards the end of the year. Spending did perk up, late in the quarter, but that was mainly because consumers bought lots of new cars and other goods to avoid tariff-related price increases. So where there was an uptick in consumer spending, it was precisely because of the tariffs coming in, and then what you're doing is you're moving It's not like you're spending more just anyway. Oh, let's just spend and not save. It's like, we're going to buy this car, but instead of buying it in June, we're going to push that forward to buying it in March. So you kind of like, so then you won't go and buy that car in June. So that means that the car sales going forward are going to dip because everyone front loaded those purchases to before the tariffs came in. So and then that will affect GDP downturn, assuming that many of those cars are going to be homegrown cars, home manufactured cars, because they'll still be using parts that are dependent on imports. So to avoid inflation on those cars due to tariffs, you buy them now, even if they're American cars. Consumers bought lots of cars. So spending did perk up later in the quarter mainly because consumers bought lots of new cars and other goods to avoid those tariff-related price increases. Car sales hit a 4-year high in March. Economists predict spending will slow down even more in the second quarter. Consumer and business confidence have plunged, and hiring appears to have tapered off because of all the uncertainty. So part of the problem is the massive uncertainty. Trump is flip-flopping all over the shop. Yeah, we're going to put tariffs on. No, we're not. Mexico and Canada. Yeah, no. Everyone, loads of tariffs, right, reduce it to 10%. China, massive trade war, up and down, up and down, up and down. Okay, what the hell is going on? What is your vision? And there's a little bit more on this a bit later, where they're like, part of the problem is there's no actually coherent vision of what the economy should look like. Yeah, there's like onshoring, but are you trying to make money from tariffs? Is it all about onshoring? That's a 10-year project at least for onshoring all of those things. Do you really want low-cost low-skilled workers working in textile factories to produce sneakers at a really cheap price in the US? Are they the kind of jobs? What really are you planning on? And then you get Howard Lutnick coming out and kind of spouting a load of half-baked ideas, and Trump not really indicating he's got a handle on things. Just, crazy. Business investment, the second biggest leg of the economy, was quite strong, but mostly because of tariff front running. So again, there is a bit of investment. It depends what you mean by investment there. Investing in capital, like that's your front ordering your stuff. Companies stocked up on imports. So that's not the kind of investment that I don't think Peter Navarro was talking about. 22% up in investment, unless it was just this, in which case he really doesn't know what he's talking about. Like if he's saying there's record investment, and actually that's just in like stocks of stuff to try and beat the tariffs, then actually he's even more wrong. He's even wronger, Peter Navarro. So companies stocked up on imports to sell later on and bought more equipment before the trade war raises prices. Of course, equipment, if you're investing in a factory, it's not like the long term we're going to spend 20 billion on a new factory and this and that. It's like we need new capital in the factory, new machines. Those machines are built, well, those ones are in Germany, those ones are South Korean, those ones are Chinese. Right, they're all going to go up. So let's get them now. So you're not just front loading stocks of, stuff, widgets and material and whatnot. You're front loading, you're buying early, just like the consumers with the cars. You are buying your capital machinery earlier. Okay. Investment in new inventories or unsold goods increased at a sharp $135 billion rate in the first quarter, compared with $49 billion decline in the fourth quarter. The inventory surge added 2.3 percentage points to GDP. Wow. Okay, in the second quarter, the tide is expected to turn. So again, that he's saying that, underneath the buying all of these imports up front, there's a 3% strong GDP. Well, actually, if part of that is dependent on the activity to react to the tariffs coming on, then actually that's going to drop off as well. So there could be some serious issues going forward. In the second quarter, as it says here, the tide is expected to turn. Imports, inventories and business spending are likely to shrink in response to the trade wars. Government spending, meanwhile, was also a small drag on first quarter GDP. The Trump administration has cut lots of spending programs and fired thousands of workers. And of course, that's money swirling around the economy. The rate of inflation climbed to an annual rate of 3.6% in the first quarter from 2.4% in the prior 3-month period. But the GDP report overstates the current level of price increases and is somewhat outdated. More recent inflation readings show prices rising around 2.5% or less. So actually, inflation might be slightly better than was thought to be the case. Big picture, GDP is a look at the economy in a rear-view mirror, but the road ahead looks very bumpy. The worst trade wars in decades have roiled the US and global economies. The White House is negotiating new trade deals with scores of countries, but these deals take time to put together. The longer the trade fights go on, analysts warn the bigger the threat of a recession. Tariffs can also raise inflation and make it harder for the Federal Reserve to cut interest rates to try to help the economy. Looking ahead, the quandary facing the Federal Reserve is that while the trend in the data is clearly showing a slowing economy, it's also renewed upward pressure on inflation, said Chief Economist Mike Fratantoni of the Mortgage Bankers Association. Quote, "We expect the Fed will hold rates steady at its meeting next week and will indicate that it will continue to hold at this level until it becomes clear whether a recession or inflation is the bigger risk," he added. The Dow Jones and industrial average in S&P 500 were set to open mixed in Wednesday. Of course, it's Friday now. So that was a kind of initial reaction. Now here we have Susan Glasser and others talking about what's going on here.
Businesses and, look, obviously you can't be taking a victory lap when the American economy is contracting and not expanding. Let's just be real about that. There's no victory here. A man who's branded himself for decades in our national public consciousness as a deal maker not only is struggling, but he's made such wildly over-the-top claims. We're 100 days into a presidency where he said he would end the Ukraine war in 24 hours. He can't, despite making concession after concession, can't get Vladimir Putin to go along with his vision for that. When it comes to the economy, I think what's remarkable is that even after Trump's approval ratings have plunged, after all of our economic indicators have started flashing red since April 2nd, that quote-unquote Liberation Day, we still can't say what exactly is the policy. We still can't say what's going on. And so you have this moment, Trump is in the cabinet meeting with his salesmen, pitchmen, pitching a vision, but no one, can say with certainty what the actual policy is. What they can tell you is that uncertainty.
That's the idea. That's that lack of vision there. No one could tell you exactly what the policy is going forward other than tariffs.
Is already proving to be its own form of toxicity in our markets.
Yeah, and listen, as I think Trump benefited from the fact that the economy is a feeling for people. It is deeply personal.
Yes,
it's
we're going to come on to this.
What you do when you go to the Target or to Amazon and look at a price. Is it higher? Is it lower? Do you want to save a little bit now for fear that prices are going to get higher a little bit down the line? And so there's no amount of deals from India. There's no amount of talking about the GDP and saying that it's Biden's fault. That's not how people think about the economy. So this sort of salesman pitch that you saw them making about industries coming here and there's going to be a plant in Arizona, what does that have to do with whether or not I think I can afford sending my 2 kids to camp in the summer? If I have 2 kids, I only have one. She will be going to camp, but it's going to be very expensive. But that's how people are thinking about the economy. And so, Peter Navarro and Howard Lutnick with their bluster, it just doesn't work. And particularly because Donald Trump promised that prices would be lower immediately, right? And that there would be stability in this golden era, and that is not happening.
I just want to get...
Okay, so she was talking a lot about consumer sentiment. So let's get an idea of what's going on there. This is Chris Cillizza from, formerly from CNN, now he's independent, giving his tuppence on this.
In April, they released this yesterday. In April, it is 7.9 points down since March and at 86 consumer confidence rating. That is the lowest reading in 5 years. And yes, 5 years gets us back to the beginning of the pandemic, the COVID-19 pandemic, which is pretty remarkable. But wait, it's actually worse than just that. So they also asked, the conference board, they ask a consumer confidence index, but they also ask an expectations index, which is essentially, how do you think the next 6 months are going to go? Things better, things worse. Okay.
So consumer confidence at the moment is down, and it's down for the lowest it's been since the pandemic. Okay, so people have taken a hit in how confident they are about the state of the economy as it is. So that's a snapshot perception.
That is down 12.5 points since last month to 54.4, which is the
12.5% drop in expectations going forward. So not only is it bad as a snapshot, but people have got terrible expectations for it going forward.
lowest mark since 2011, lower than even during the pandemic. And I'll note, so I said it's 54.4, the expectations index. Anything below 80 is seen as an indicator of a potential recession. We're at 54.4. And it's not just this one. It's not just the Conference Board's Consumer Confidence Index. It is also the other major confidence index, which is run by the University of Michigan, Consumer Sentiment Index, they call it. Okay. In that, down 8% since March on the consumer confidence piece. On the
Since
they also
March.
do an expectations index. On the expectations index, down 32% since January, which is the biggest 3-month decline since, wait for it, 1990. I mean, we are looking at historic levels of decreasing and rapidly decreasing confidence in the economy, both as it is today and as it will be in the coming months. What does this mean?
Important question.
Well, I've talked many times in this space about the economy is a lot of perception, right? How people feel about the economy is oftentimes more important than a leading indicator, a GDP or consumer price index about the economy.
So this is what they're talking about in a CNN piece there, where she's like, how do you feel about going to Amazon or Target or whatever? Well, actually, that is a reflection of your perceptions. And actually, it is really important. Perceptions are reality.
And that's why I pay really close attention to these consumer confidence indexes, because they're a really good indicator of how the public is generally feeling. And look, it makes sense, right? If the public feels a lack of confidence in the economy, they are likely to spend less money. They are likely just to save money, right? Not make any big purchases. That slows the economy, right? Which means that the numbers of the economy,
Vicious cycle.
numbers of the economy, the real numbers, slow, which leads to people believing the economy is bad, which leads to them spending less money, right? It's an unvirtuous cycle.
Vicious, we might say.
An economist. And that's, I think, where we may be right now, which is...
So I think that's a really good analysis there. The dollar's down 10% in the Trump administration's first 100 days. That is then going to cause its own problems there. Now, first and foremost, that means that imports are more expensive. So that's going to exacerbate the tariffs issue as well. But the dollar being down is also a reflection of possibly deeper seated woes for the American economy. This is a BBC article, Why Should I Care? The US dollar falls. And it's a 3-year low against other major currencies at the moment. Is this unusual? The fall in the dollar after Trump's Liberation Day tariffs announcement was quite shocking, says Jane Foley, head of foreign exchange strategy at Rabobank. And this is 23rd of April, by the way, just to give you the context there. For several years, the market's been buying this US growth story. The US stock market's been outperforming other stock markets, and suddenly you had economists thinking tariffs would push the US into recession, she says, pointed to the massive sell-off of US stocks, US bonds, and the dollar. That has raised speculation about whether the drop might signal a more far-reaching turn away from the US, as well as away from the dollar. So the first time ordinary Americans might notice a weaker dollar is when they go abroad, as their money will not go as far. While foreign tourists in the US will find their currency will buy them more, but movements in the dollar also have a massive impact internationally, more so than swings in other currencies do. That's because it is the world's primary reserve currency, meaning it is held by central banks around the world in large quantities as part of their foreign exchange reserves. Central banks use US dollars in international transactions to pay for international debt or to support domestic exchange rates. The dollar is also the main currency used in international trade, with around half of the world trade invoices done in US dollars, says Jane Foley. A fall from the dollar means US goods exports become cheaper, but imported goods may become more expensive due to the weaker currency, as well as any direct impact from tariffs. So, of course, the positive there being that their exports will be cheaper for other people. Many commodities that trade internationally, such as oil and gas, are also priced in dollars. A weaker dollar makes crude oil cheaper for countries that hold other currencies. And what happens if it keeps falling? Well, in the US, a strong dollar has been seen as a symbol of American political might. The very idea that it might lose its status as the world's reserve currency has been unthinkable. Ms. Foley says that while other currencies may become more important, the dollar won't lose its number one status anytime soon. Although one Federal Reserve official suggested last year that the US can no longer take this for granted. Ms. Foley thinks the dollar will win back some ground over the next few weeks, but will not get back to where it was. That's because of very significant market moves. There's always the possibility of profit taking. For instance, if investors decide to sell euros while they're trading strongly, that could lead to the euro falling and the dollar rising. The markets will be watching this week to see if Trump continues to his attack on the head of the Federal Reserve. He has called Mr. Powell a major loser and has publicly called for his termination. If there's pressure on Powell to leave the office, the markets will start to wonder about the Fed's credibility, something which is seen as crucial. Quote, the independence of central banks is seen as critical to ensure long-term price stability, ring-fencing policymakers from short-term political pressures, says Susanna Streeter, head of money and markets at Hargreaves Lansdown. Now, he's toned down Trump, his rhetoric against Powell, because he was, I think, probably wrapped on the knuckles by people around him saying, look, if you're going to attack the Fed, then the credibility of the Fed goes, and we've got some serious economic problems. And of course, Trump just shouts his mouth off, doesn't he? He just says what's in his head, and he has no real veto system, and probably because he's fundamentally ignorant about macroeconomics and geopolitical interactions. So there you go. Now, Trump is doing the whole up is down, down is up, left is right, right is left thing. He's blamed Biden for the stock market decline and other economic problems in the US. Ironically, when the stock market was rising under Biden, as I pointed out the other day, Trump claimed the credit for it. So the two tweets in question here, the two Truth Social posts even, is and this was on January the 29th, 2024. So when Biden still had a year left on his tenure, the stock market was reaching record levels. And Trump famously, there's plenty of evidence he was saying this at rallies and at interviews and whatnot. This is the Trump stock market. He said, because my polls against Biden are so good that investors are projecting that I will win, and that will drive the market up. Everything else is terrible. Watch the Middle East, and record-setting inflation has already taken its toll. Make America great again. So with a year to go, he was saying that amazing Biden economy was all because of Trump, right? And yet 3 months into his tenure, he says the Trump economy, the economy under Trump, where he's been in charge for 3 months, is the Biden economy now that the stock market has gone down. So when the stock markets went up a year before he became president, it was his economy. And 3 months after he's become a president, it's now Biden's economy because it's bad. This is Biden's stock market, not Trump's. I didn't take over till January the 20th. Tariffs will soon start kicking in and companies are starting to blah, 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 blah. And this is kind of classic gaslighting. And of course, his peeps will lap this up. But the reality is, no, you're not justified in these kinds of approaches. Okay, now we move on to, it's interesting, this whole interview with Jeffrey Goldstein was really fascinating, but we're going to go on from this in another CNN excerpt that I think is useful.
Much good to see you.
It doesn't matter how many times you say it, it does not make it so.
sorry, and just to go back to that Jeffrey Goldstein interview, something he said at the beginning to Jake Tapper was fascinating. So Jeffrey Goldstein, he was a guy that was on that Signal Gate chat, that Signal scandal, on the chat group with Pete Hegseth that was created by Michael Walls, and now Mike Walls has been moved aside. Goldstein has just had an interview, like Atlantic's just had an interview with Trump, and he said what was fascinating from that interview, a couple of things. One is that he brought up, not without any triggering from the Atlantic team, but Trump in that interview brought Biden up 8 times. Just out the blue, slagging off Biden 8 times. Biden he's living rent-free inside Trump's head. And he's blaming Biden for all sorts still. And I thought that was fascinating. The other thing he said was that, pertaining to the people around him, I'll probably come to that at a later date because it's not necessarily to do with the economy here. But here we have, the analyst here saying, no matter how many times you say it, it doesn't make it true.
This is, as Phil said, this is not Biden's economy. This is Trump's economy, no matter how many times he says it or posts it. And Phil will explain to us why we can't technically call it a recession yet, but because we need a second quarter and then we'll look back. But everyone I spoke to, Wall Street, business leaders, that's what they're expecting, a recession. I think beyond the bad politics of it, because fear and uncertainty is not good for the economy and it's not good for
consumer sentiments.
A politician. We have to remind people that even if all of these tariffs work out, it would take 5 to 10 years to bring these jobs back. Question whether Americans want all of these jobs. Will business leaders take the gamble of making these kinds of investments when they're looking at something 5 or 10 years out, or are they going to ride Trump out?
Bill Stepien, I keep coming back to this question because, clearly we've seen him say over and over again, it's Biden's market, it's Biden's market, it's Biden's market. But he does want credit for what's going on with the tariffs, and he's taking full credit for that. He said there in the Oval Office, Biden was doing this thing, I'm doing this other thing, and yes, your toys may get more expensive, you may have fewer of them. If you were advising him, would you be telling him to talk about it like this?
As a parent with kids with birthdays coming up, I appreciate the lower expectations for toys.
Good point.
Look, the GDP is a math equation. As imports go up, GDP goes down. And businesses were rushing to beat the tariff deadlines. 41% historic amount of imports this past quarter. So there really shouldn't be a surprise here. And I can recite the Republican talking points about core GDP being up and private investments, as you said.
Which are true.
But the problem is there's a lot of trade talking. There's no trade dealing, right? Deals are going to be done. We heard that this weekend. 90 deals in 90 days, not done. Until that gets done, until Trump's advisors actually get deals done, every report, every quarter, every month, Trump's going to be on defense.
So true.
Trump can only blame Joe Biden for so long, and this is actually laughable. It wasn't Joe Biden that put uncertainty in the economy. It wasn't Joe Biden that decided to put tariffs in place and try to send the economy into total chaos. It was Trump. And I think that he believes that he can tell people, listen, this whole short-term pain is his message to the American people. But when does that end? And there is no end in sight. And to your point, this might be 5, 10 years down the road. We're not sure if businesses, actually, we don't even know if it's 5 or 10 years down the road. And he's caused so much uncertainty, and businesses don't even know how to plan. So it almost makes it impossible for Trump to highlight success, because what does success look like at this point? So I think that if you're a member of Congress...
So this is to do with a vision, right? If you don't have a vision and you're creating uncertainty, businesses need uncertainty. If you're going to invest $50 billion in something in this country, you need to make sure that that country is secure and stable and is going to facilitate you investing. You're going to get a return on your investment. If there's complete unknowns and if there's chaos and you've got tariffs going up and down and left and right, then you are not going to invest in that country. You're going to say, we're either going to put it off until we know, like she's saying, ride out the Trump administration and then wonder about investing after that, or we're going to invest abroad. So where they're not having a trade war with each other, and we'll be able to access all of those people with building this thing somewhere else, rather than build it in the US and then have tariffs all over the shop. So the present political climate in the US is not conducive to investment and to economic stability that brings about economic growth.
Congress on the Hill right now, Republican member of Congress in a tough district, I'd be going to the White House and saying, you have got to give us some certainty that we are going to be able to help the American people, that they're going to see some benefits from the tariffs, because right now people are hurting. And I'm not sure that they're going to be okay with that in a few months.
Totally agree. So, okay, Trump is then challenged on this. A reporter reminds Trump that he took credit for the stock market when he first took office. Trump would be would absolutely hate it if this kind of went viral, says that post. Well, actually, here's the longer interaction between the reporter and Trump.
The transition, sir. You frequently took credit for the stock market highs. You said it was a reflection of how well you were doing in the polls, and then after you were elected, you said the stock market highs were a reflection of how well the transition's going and the American people's confidence in your incoming administration. Now, the stock market's not doing so well, and you're saying that's the Biden stock market, yet
Boom.
You are the president. Can you explain that?
Yeah, I'm not taking credit or discredit for the stock market. I'm just saying that we inherited a mess, both at the borders.
And that's a lie. That is an outright lie, because on Truth Social and in other places, he has taken credit for when stock market is up, and he has blamed Biden from when stock markets are low. I've shown you 2 of those already. So now he's lying. And as the person here says, Maine says, his answer is just word salad. This is just word salad.
You could look at every single one of the people here, and no matter who it is, they're doing better, and they are far superior to what took place for 4 years before us. When you look at prisoners being...
And remember, the other thing that I always say about Trump, and I said this last night in the live stream, you listen to everything he says, and he's never once, ever granular in detail with like proper meaningful substance about any topic that he's talking about, ever. There's no laying out of really well thought out ideas and numbers and rationale defended by lots of evidence. He occasionally throws in a percentage, but he basically talks in real vague generalities. And let's put that to the test. Let's see if his answer is granular in detail, or whether these are just vague generalities. Like, my guys are good, their guys are crap. Everything was terrible then, everything's amazing now. Crime was terrible then, crime is amazing now. That kind of thing. Like, anyone can say that. I want good detailed analysis and good data and evidence to support what you're saying. Do we see that?
What took place for 4 years before us. When you look at prisoners being allowed to come into our country at will, just at will, people from mental institutions, gang members, drug dealers, when you look at that, what they've done to our country, and also...
You look at what they've done to our country. What have they done? Evidence, data. Like, honestly, don't give this guy the elbow room to just splurge his word salad. This is not good enough, and it shouldn't be good enough to anyone. But because people hear what they want to hear, you hear, like, yeah, I hate immigrants, and I think they're all criminals, and what he's saying, yeah, they're ruining the country, and last administration, yeah, those are all generalities, right? He's just pressing these kind of talking point buttons that he's so used to pressing, but they're just devoid of any substance. They are devoid of any meaningful substance. They're just mere assertions.
Gang members, drug dealers, when you look at that, what they've done to our country, and also having to do with finance. Look at what happened with inflation. We had...
And also having to do with finance. Look at what they've done to inflation. Who's he talking about? The gang members and the criminals, or has he gone back to talking about the people in the Biden administration? Just generalities, just meaningless guff.
And also having to do with finance. Look at what happened with inflation. We had the worst inflation probably in the history of our country. They say 48 years, but I would say in the history of our country,
they said 48 years. I would say the history of our country. Why? I want it to sound much worse than it is. So they say it's the worst inflation 48 years, pandemics, etc., etc. They said it's the worst inflation 48 years, but I would say it's the worst inflation in the history of the universe, and actually multiverses. In fact, all other possible verses that exist out there with all sorts of different societies involved, and wherever there's economics taking place there, this is the worst inflation that's ever been. Before, but Biden, not me.
Away at people, and even though you saw a stock market going up somewhat, because in my case,
stock market went up to record levels under Biden.
The biggest stock market increase, 88% in the last term, in my last term. But I don't view the stock market as the end all. It's an indicator. But what the stock market really tells you, and when you look at the stock market in this case, is it says how bad a situation we inherit.
So he's saying the stock market just going down after I announced tariffs and trade wars, that is a reflection of the inherited economy. No, it's not. It's literally not. So it's word salad, or I would put it more accurately, it's just lies and nonsense. Lies and nonsense. And then he lays it up for quarter two being Biden's fault as well.
This is a quarter that we looked at today, and we took all of us together. We came in on January 20th. So this is Biden, and you could even say the next quarter is sort of Biden, because it doesn't just happen on a daily or an hourly basis. But we're turning it around. It's a big ship to turn around, and we're going to have the greatest country financially in the history of the world, I believe. I think we're going to do things, and we had to do it. We reset the table.
In the history of the world. Why does he stay at the world? Why not the universe? Why not the multiverse? Come on, Trump. You're better than that.
We were being ripped off by every single country, without exception. I'd have to really think hard for who hasn't taken advantage. And I don't even blame those countries. I blame the person that was sitting right here where I am for allowing.
Of course you do. It's Biden's fault.
Where our country was ripped off on trade, hundreds of billions of dollars, and now we're doing better than we've done in a long time.
What about the person that was in charge 4 years before that, 2016 to 2020? What about him? Only that was you. So then there's just more winning, rational expression.
And I told you before, they're having tremendous difficulty because their factories are not doing business. They made $1 trillion with Biden, $1 trillion, even $1.1 trillion with Biden selling us stuff. Much of it we don't need. Somebody said, the shelves are going to be open. Well, maybe the children will have $2 instead of $30, and maybe the $2 will cost a couple of bucks more than they would normally. But we're not talking about something that we have to go out of our way. They have ships that are loaded up with stuff, much of which, not all of it, but much of which we don't need.
Now, we can have a much more nuanced argument about consumerism and whether we need as much stuff as we've got, whether we have too much stuff. But I don't think that's where he's going here. He's basically saying, oh dear, it's a problem because we're going to have the empty shelves. So let's just say you don't need as much stuff and it's going to be okay that the fewer things you've got, $2 instead of $30, and the $2 are going to be more expensive. But, tariffs, so that's good. And we'll be making some of the dolls back here for tuppence halfpenny in the factory. That's a wage they're going to be in tuppence halfpenny a year. Do you know what I mean? These are half-baked ideas, and when you start getting Microsoft coming out with the effect of the tariffs on their kit, here's a breakdown of price increases. Xbox Series S 512 gigabytes, from $300 to $380. Xbox Series S 1 terabyte, 350 to 430. Xbox Series X digital, 450 to 550. I mean, these are pretty substantial increases. Xbox Series X 500 to 600. Some really substantial price increases going on, and that's just a normal console, but stuff that families will be buying, then that will depress the consumer expenditure around that kind of sector, and that's just representative, I think, across the board of how tariffs will have an effect. And then we talked about Powell already, the Fed chair.
The country. Mortgage rates are actually down slightly, even though I have a guy in the Fed that I'm not a huge fan of, but that's all right. These are minor details. Don't tell him I said that, please. As the cameras rock and roll back there. No, he should reduce interest rates. I think I understand interest a lot better than him because I've had to really use interest rates.
Donald Trump saying, I understand interest rates more than the Fed chair, the chair of the Federal Reserve. I understand interest rates more than him because I use them. I understand cars more than the car manufacturer that built my car. I understand cars more because I drive them more. Do you definitely, does Powell not use interest rates at all? I don't know. It's just such bonkers rhetoric from this man.
But we should have interest rates go down. It would be positive. But it's not going to matter that much because ultimately what we're creating has much more to do with other things than it does just pure interest rates. But it would be nice for people wanting to buy homes and things.
So go back to my previous point. Sorry to belabor the point here. Generalities and a complete lack of substance and granular detail.
Rates, but we should have interest rates go down. It would be positive, but it's not going to matter that much because ultimately what we're creating has much more to do with other things than it does just pure interest rates. But it would be nice for people wanting to buy homes and things.
I just honestly, this guy's an absolute freaking clown. He's an absolute clown. He just hasn't got a clue. Trump's golden age continues to shine. Adidas warns it will raise prices on US products due to tariffs. Higher tariffs will eventually cause higher costs for all our products in the US market, Adidas said in a statement. And then you had the situation of Jeff Bezos. So in Amazon Hall, they were going to put on their website, not the Amazon main website, but a kind of subdivision, and they were going to put the effect of all the tariffs on the price of everything, so that the people buying that could know that it's not Amazon that's responsible for those price hikes. So they go somewhere else to do their business. They would go to Amazon Hall because Amazon Hall is letting you know that actually the tariffs are causing those price increases. So then Donald Trump phones Jeff Bezos and they called, by the way, Caroline Leavitt in the White House called this a hostile and political move by Amazon. Jeff Bezos is one who supported Trump, has paid $40 million through Amazon for Melania Trump's documentary, paid $1 million to Trump directly for the inauguration fund, so on and so forth. He's trying to cozy up to him because, of course, space, he doesn't want Elon Musk to get all the SpaceX contracts for SpaceX. So he wants is it Blue Sky or whatever it is? He wants space contracts, and he wants Washington Post and Amazon to be able to have Amazon as a media organization to have the ability to say this and do that and whatever. So he's cozying up to Trump, then gets into trouble because he wants to publicly express the effect that tariffs will have.
Jeff Bezos was very nice. He was terrific. He solved the problem very quickly, and he did the right thing, and he's a good guy. Jeff Bezos.
So Jeff Bezos is a good guy because he did what Trump told him. Trump phoned him up, got him to take down those statements on each of the items on his Amazon Haul webpage. We now know Trump personally called Jeff Bezos and let him know the consequences if Bezos and Amazon reveal just how much Trump tariffs are screwing the American people, says Bill Madden. And there you go. That's the control this kind of dictator wannabe has over his minions, his billionaire oligarch minions. Anyway, that's just a romp through the economic landscape of tariffs and the US at the moment. Let me know what you think. My kind of TLDR of this is, too long didn't read. What you got to say in one sentence: Trump is an economic clown, and he doesn't know what he's doing. There you go. That's my conclusion. Prove me wrong. Take care. Speak soon.